Colleagues, it's 9 p.m. Sabata. I'm doing a quick video. It's a follow-up of what I've discussed before. In recent days, I've been discussing my investment philosophy. But what I'm talking about today is this tweet which I posted here about SOL, where I said it fits my investment philosophy and it's 3 times out of the standard deviation, Bollinger's Band deviation. Where I'm really going to today, I'm not hammering over the investment philosophy anymore. I've made my point on that one. I just want to touch base on this one point, that I play probabilities for a living. I want just to bring the idea of how I play the probabilities. And at the end, I'll give you a cliplet of the investment, the option structuring, which I keep referring to, but I haven't dealt with it in depth, and I'm not going to deal with it in depth, but I'll give you some references where to go and learn it, who can teach you that system I'm talking about. So, and I mentioned that I did a screen to come up with this solar what company, and let's go into it. ReneSola. I'll just call it SO as we go. I'll start with this screenshots. Screening. I screen from FinViz, and my screen, let's just go through it together. It will be quick, guys. If you have challenges, you slow it down and take a look. I'm not going to be describing everything I'm doing on the screening, but you can follow. Key, I want it to have option structure. Okay, let me just do a quick one. It should be optionable and shortable. The market cap should be above 2 billion. Then volatility should be above 10. Once I get those, I'm good to go. That's it. Once I'm here, what I do is I go to technicals. Then I use the SMA 200 moving average. I change these screens. It's not like it's a must that you are stuck with one. You can change them any way you want. And you filter by SMA 200. The biggest number is where I come in, because there's a chance that it can be shortable. But hey, some you think you can short it and it goes the other way. It is what it is. So after doing the screen, that's where SOL came in there, up there, even above GM, which I've been trading recently. This is sitting at 741% above the 200-day moving average, which is extreme. And it's the one which is the most extreme. So I thought, great, let me have a look at it. Then once I had screened it, I came and looked at the chart. I can see that there's some parabolic move, serious parabolic move up that are interesting. That's what I like to see. Because if it moves this way, there's a high probability that it will move back. It cannot continue moving this way. Cannot is a strong word. It can continue for a month or two, then it will dump anyway, or it will stay the same. So those are the probabilities. But in most cases, when it hits such a parabolic move, it usually tanks or the craziness continues, but it rarely stays the same. That's what I like. So that's where the issue of probabilities come in. What's the probability of a stock staying 741% above its 200-day moving average? Very slim. That's where I come in. And looking at this company, the fundamentals are really messed up. It's the type of company which I would say I will never invest in this one. It looks there's too many things not going right. It's a 2 billion company. It's making a 10 million loss. Its PE is sitting at 108, way expensive. And it's not making money. In the past 5 years, earnings per share have been negative 5.7. Sales past 5 years, negative 40% down on an annual basis. Quarter to quarter, 85% down on sales. This is not a standard good company you find people rushing in to invest in. But they are. Return on assets, negative. Return on equity, negative. Return on investment, negative. It's not making money. Then we come to what are the analysts' mean target price? It's 9.25. Where is it trading? 33. About 4 times what the analysts think it should be at. So there is something really amiss. If all the analysts who track the stock think it should be at 9 and it's trading at 33, then you see that there is something going on and there's a probability that this thing can come back to what they are saying. It's just probabilities. And what has the market done? They've rewarded it greatly. For the week, 32% up. For the month, 253%. It has more than doubled in a month. For the quarter, it is 8 times higher than where it was previously. For the year, half year, it's 2,000% higher. For the year, 2,382% higher. Year to date, and year to date we are just on 24 days, and not all of them are trading days, and it's already almost double. So this is the kind of stock which I start asking myself, what's the probability for it to continue like this or to take a breather? That's where I come in with my structuring of saying there are 3 things which the stock can do. It can continue going up, do the sideways, or go down. And I would like to be the man who gets in there with a probability of 2 out of 3. If it goes up, I want to benefit. If it goes down, I want to benefit. So when I set up my structure, my option structure, already I'm looking at 67% probability of being right. And for it being in this extreme position, I have a strong probability that it won't stay the same. That's where the probability comes in. Most people come in with a bet that it will continue going up. On that situation, you have a 33% chance of being right. If it goes up, fine. If it goes sideways, you are losing. If it goes down, you are losing. But I prefer to have 67% chance, 2/3. If it goes up, I win. Goes down, I win. Then the other factors filter in later when you do your option structuring. This is what I'm looking at. So I go to my structuring. I'm using the weekly. This is stock RSI. I've spoken about this one in my previous video. When they are all grouped there, the chances are it's in the topping zone, it will come down. When they are grouped down there, it's in a bottoming zone, chances are it will go up. There we are, another example, but I won't label that. So there is a strong probability that this thing will go down, but even if it continues. But one thing I like about these probabilities, when you see a parabolic move like this, chances of a 20% retracement or an explosion up are very high. That's where I play probabilities for a living. And just to illustrate this chart which I put on Twitter, where I mentioned that it's outside the 3 times Bollinger Bands. This is the chart which I have. It's really doing nothing, all that was staying within. Then boom, an explosion, parabolic move, and it's even closing above its 3 standard deviation move. And this usually tells me this is a very, very rare occasion. I spoke at length about this one on my previous video, but just to illustrate that point again. When it's 3 standard deviations away from the mean, this is an occurrence which happens 0.1% of the times. It's very rare, and it usually corrects very fast, revision to the mean. That's where my probability basis is. I played the same issue on GME. And what happened on GME? The craziness continued. And it rocketed 50% or more after I'd gotten in. And that's already more than a 5-bagger. I won't say how much baggers it is, but it's more than a 5-bagger already. How do I come with that 5-bagger? This is the other part which I would like to show you. on the option structuring. Guys, when I'm showing you this one, I'm very cautious. This is not my video. It's somebody else's video. And I'm going to give kudos to him. But he withdrew this video from YouTube. So I'm not very comfortable sharing the full video. I'll just show you a Photoshop of the video, not the whole video, just one frame, and that will illustrate my point. If you want to know more about it, he is a teacher. You can go and follow him. He's Risk Doctor Charles Clot. He has written books. He has a website where he teaches these things. So if you want to follow him, go and follow him. But for the video's sake, I'm just going to show you this concept of 5 bakers using his method. But you want to know about it, better go to the original teacher. Here we are. This is a video. It's a 12-minute, 18 seconds video, but I'm just showing you this photo level only. This is the structure which I like using from his teaching. I do not want to try and cook it up and hide the identity of where I learned it, so that if some people want to learn, they can go and contact him. This is how it's structured. Basically, if this thing moves about 12% back, I break even. If it moves up, let's suppose it moves 25%, it will be at about 100. And you can see it's now at 1K, the profit. It would have cost me to structure about 200. So if it moves by 25%, I'm looking at a 5 bagger. That's where this concept of 5 baggers when it's moving 20% comes from. How did I reduce it 20%? Is because I structured these two. I don't just go one side. This is he was illustrating an example of a call. Here using this slingshot hedge. I construct the two of them at any given moment. And I rarely put them at the same spot. Sometimes I move it this way or that way a little bit, but they will be close to each other there. So basically, that's where they will end up doing this struggle. When you put the call one and you structure the put one together, they can form a struggle. That's where the 5 bakers come in, guys. You want to learn it, contact the Risk Doctor. He will teach. He has lots of teaching. He has courses where he teaches derivatives. That's where I learned it. But that's the basis of it. He was illustrating using some shares mixed with options. But I construct this using options only. It's very easy. You take the one of the shares and one of these options, they net off to a synthetic something, then you end up using options only to structure this and you get your 5 bakers. This is the illustration. If it moves from 80 to 100, it's a 25% move and your reward is about 5 times what it cost you, and that's a 5 baker. That's what it is, guys. That's how I do the 5 bakers, which I keep talking about. I just wanted to illustrate that. And if you want to know more about this one, you won't find it on YouTube anymore, but go and get it on, go and talk to Charles Clot himself. He will teach on these ones and give you some direction. Yeah, so that's what it is. When it's here and I construct that struggle using that method, if it moves from here 20% down, already I've been nailing, and when it moved 50%, it's more than a 5 baker, but I won't deal with that much. But in a year, if you catch 2 or 3 of these, you've made your year, guys. You don't need to catch lots of them. 2 of them, let's suppose you have an account with 1,000. You catch one and it gives you 5 baker, you are at 5,000. You catch the next one, it gives you another 5 baker. That 5 becomes 25. So your return for the year would have been starting with 1,000, ending with 25,000. That's crazy returns. But you don't get them every day. When you do get them, you act. In the past, I'll just mention the ones which I have done. I've done the ones which I've shared publicly. It's Moderna, this COVID virus. video. I have it here, but you won't get it. It's private. I have respect for the guy. In the past, I did a video on COVID. Yeah, here it is. This one is still public. Trying to highlight it. Oh, low. My battery is getting low. Let me just connect that quickly, guys. Okay, there is this video here. I called it the COVID-19 vaccine trade. That was the first one which I shared publicly using my investment philosophy. And yeah, I've been in it up and down, up and down. It's the Moderna issue. It was using the same thesis. What I was saying here was either story behind the thesis. And what has since happened to Moderna, it has been a good company to be playing in that space. I picked on it when it was at 80, around July. Oh no. Okay. Let me just show you. I picked on it around 80 there. It went down to this level here. That was more than 20% return. And up she went. Major returns, guys. If I can just do this for you. I didn't pick it at the tops here. I picked it when it was at 80%. You can see that that move was more than 20%. It did give a 5-bagger return. And if you picked it up again here and went with it to the screaming highs there, it was more than 100%. And when we do that leveraging, it's crazy. And what happened? It did drop again to those levels, giving you another 20%. On its own, it has given 1, 2, 3, more than a 5-bagger here, more than a 5-bagger there, more than a 5-bagger there. So in one stock, we have had the joys of it doing 3 times within a year. And this was not a 5-bagger. This was major. I won't say how much it was, but it was major. This was close to a 5-bagger. This was close to a 5-bagger. But this is 100% return. A 5-bagger is just a 20% return, guys. So I'm just illustrating that issue there. Then the other one which I've shared publicly is GameStore recently. And what did GameStore do? It screamed 50% up. When it moved up to 50%, I hedged the 50% to limit that. And yeah, it came back and closed somewhere there. So I'm limited there. If it starts crashing, I'll change my position. If it continues going up, I'll still benefit more. That's game. I'm only sharing the types of stocks which I mentioned publicly. Those which I did not mention publicly, I'm not talking about them. Here's the game one. I have a thread which I've done on it. This is when I did the hedge after it had moved 50% up. I also spoke about Alibaba, but I never posted a video on Alibaba. So it wouldn't be fair to start giving an idea about Alibaba. I'll just leave it to my archives. But Alibaba, when it was down here, that's when I spoke about Alibaba. It was about 28th. Let's go and look at here. I just mentioned that I was going to do a video on Alibaba. January the 20th. That's where I mentioned 20% level of gain achieved. But this one was already done. This one was still happening. Okay, here it is, 28th of December. I will share an investment thesis on Alibaba tomorrow. In 3 months' time, it will have moved more than 20% either up or down. 28th of December is when I mentioned that. This is where we were. When I mentioned it, if someone had taken this position, let me just illustrate that. Currently, this will be giving them about 17% return, working towards a 5-bagger. It's already more than double, and we're looking at a 5-bagger, but it's not yet fully done. But won't talk much about that because I never really gave a detailed analysis on that. So yeah, and this is the next one which I'm just doing. Here I was talking about an advanced credit diagonal put ratio spread. If you look at that video which I shared from Risk Doctor, that's the advanced part of how to construct it. Now I'm saying this is a trade to take. Either way, it's either going to shoot up or shoot down. Time will tell, but in 3 months' time, I doubt there's high probability it won't be where it is. It would have given you more than 20% or down more than 20%. That's my analysis, colleagues, and I'm going to cut. This was the first time I really did a detailed one looking at Moderna, and since then I came up with the game store. Now I'm talking about ReneSola. Alibaba did not mention much about it, but it was done. Then yeah, I've shared enough. Key, guys, is sling headshot from Charles Clooney. When you want that, it can show you how to construct that option structuring where you have the comfort of knowing that as long as it moves a lot either direction, you'll be okay.
And we don't also, it's not.
Let me just get, no.
It just makes it so that it's.
That's the part which I just wanted to show you again. If you can construct these for the calls and for the puts and you get your triangle, the worst it can happen to you is when it pins on your entry point, but you can always put an option structure on top of this to make sure that it levels off. But usually these move in either direction. So if I put a put option here and this thing moved up, then once it had moved to about 90, the put structure here would net off a small credit of about 1%, and this continues on its own. So either way, I won't be panicking. But let me close this. It's not the core part of the video today. Colleagues, I thank you. It's Tusanang PM Sebata. Bye-bye.